Hello traders and welcome to another video review. Today is Monday, January 15th, 2025. Let's take a look at the economic calendar for today. Overnight data during the Asian session were mostly focused on the Chinese data, exports, imports and trade balance. All of them beat the expectations, are better than expected. So as you can see, big, nice, good data from China. During the London session, we got the consumer climate data from Switzerland, then another bunch of data from the Chinese Republic, new loans. This data is scheduled for release at noon. And that's about the very important data releases for today. As you can see, eventually there are some CPI data from the Russian Federation. However, that's nothing left in the calendar here today for the Monday 13th. So without any further ado, let's just switch to the charts and we start with euro dollar. Euro dollar is on the way down as it broke below the level of 1.0242. So this level now is the technical resistance. We went as low as 1.0208 and we hit eventually the extremely oversold market conditions. Still, the key short-term technical resistance is the level of 1.0450. So as expected, this zone will now act as the supply zone, just like the zone between 1.0350, 1.0337 and the technical resistance at 1.0241. There is a nice thing for the bulls as well, because we might have bullish divergence. We got new lows here on the chart. However, the momentum doesn't actually agrees with the new low. It doesn't make any new low, and you can see that all of these lows, even since the December 18th, basically on the momentum are higher lows. So we got lower low, and lower low here on the price chart, and we got low, higher low, and higher low on the momentum chart. So this definitely looks like the bullish divergence. Traders should expect some sort of the bounce soon, as long as we trade inside of this channel. However, the outlook remains bearish, so the bounce might be just a corrective in nature. As you can see, 100 periods moving average is as well very much above the current euro dollar price. This is 4-hour chart, so it's quite important. Please notice that we're coming quite close to the parity level when the euro will be equal to the US dollar. We are only like 208 pips away from the parity level again, and this level, we've seen this level before in 2022, just after the pandemic, after the COVID. Okay, so that was the euro dollar. Now cable. Now the situation is quite similar to the euro dollar. Again, there was a rejection of the key technical support after it was violated. So now this level here, 1.2298, will be labeled as resistance again, and then we got another movement to the downside, down towards the level of 1.2125. Of course, this level was made during the extremely oversold market conditions on a 4-hour chart. That's the level of 20 points on the RSI. So as you can see, bears are pushing the prices way lower. The downtrend continues. If we switch to the daily time frame chart, you can clearly see all the week of all the previous week was down basically. So very a few of the red candles were made with which have basically a very big impact on the breakout below this low from the April 2024. If we zoom out even more, you can see that we are getting straight into this congestion zone, and the lows from 2023 just roughly around the level of 1.2030, 1.2051. So we are not that far away from those levels. Please stay focused, as we might hit these levels, and then of course due to the extremely oversold market conditions on a daily time frame chart, there might be some sort of the bounce from this level. So let me just mark those levels here. So we need to have need to keep an eye on these levels these days, because they seems to be quite important. Right, so the outlook remains bearish, very sharp movement to the downside into the extremely oversold conditions. Now we are waiting for some sort of the indication that the bulls are trying to perform the pullback. US dollar versus the Japanese yen. Daily time frame chart is showing us 3 red candles in a row. The last one, of course, is a daily candle, so it hasn't been finished yet. But we got the clear rejection of the January 8 high at 158.56. Big candle with the long upper wick on the daily time frame chart. On a 4-hour time frame chart, we can see a kind of a bearish sandwich, bearish engulfing pattern, just right above the swing high 158.56. Now on a 4-hour chart, we got the support from the blue line, which is of course the moving average, 100 periods moving average. This moving average is located at 157.17, and the momentum remains very stable. So we go up and down, hovering around the level of 50, just as we are on the chart, except the potential bearish candlestick pattern that was made here. So what we need to do in the short term in order to trigger the bigger movement to the downside is of course the test of this technical supports that were produced on the level of 157.25, and then at the level of 156.04. So 156 of 25, 156.05. This level is even very close to the 155.95. So this is a very nice zone here, zone support here, and the zone as well, because as you can see, the market keeps moving in a very limited range, like 228 pips, and it's been like this since the highs made around the level of 157.70 on December 19th. So we got this nice zone here, local swing highs, but not that impressive at all, and the market goes back to the middle of this range. Any breakout lower would be very bearish indication for this pair, right? So if this situation happens, so we are below the 155.57, then the momentum will definitely spike lower towards the extremely oversold conditions. For now, the sideways action continues on the US dollar to the Japanese yen. Let's take a look on the US dollar index, because if everything is going down like cable and euro dollar, what is US dollar index doing? And you can see it clearly. US dollar index is moving higher. 109.95 is the local high. Yes, 109.95 is the local high, and the swing high on the 4-hour chart. If we switch to daily, you can see this very steep line here that basically defines the uptrend. Very nice short pullbacks, and the momentum stays above the level of 50, most likely around the level of 60-70. It hits the extremely overbought conditions plenty of times during this movement to the upside, but because the market is trending, the momentum might stay on the elevated levels for the extended period of time. So don't be surprised in that situation. Let me just zoom out to see where exactly this market might be heading to, and it looks like this is some sort of the high series, like a peaks in November 22. So this is like a post-COVID high. The highest high is 113.76, and this is where the market might be heading next, because with that steep trend, there is almost impossible for the market not to test these levels from 2022. So please be prepared that we might see euro dollar below the parity, British pound or cable below 1.2 level, and the US dollar index moving way higher, back above 110, and then climb again towards 113. And last but not least, let's talk about the Bitcoin. It looks like the Bitcoin is about to break to the downside. Now you remember this zone we established here. This is the demand zone, and just recently we got this situation when we tested this demand zone again. Then the bulls, of course, appeared. They bought the dip, but there was no result from this buying, right? So we got very limited movement to the upside, and today again the red candle is being printed with the negative momentum at 44 points. So it looks like the market is under the very big pressure. If we zoom out, and let me just let me just do this, something like that. It might not look obviously for the first glance, but it might be some sort of the head and shoulders pattern on the Bitcoin, with the very big left shoulder with this swings up and down. Then of course movement for the head. So the head is the all-time high, 108,362, and then this movement here for the right shoulder, because this is a top formation pattern, and possibly it might indicate the possibility of the trend reversal. This on a daily time frame chart would mean that eventually the Bitcoin would get way below the level of $90,000, down towards the level of even $75,000, because there is a measure from the top of the head to the bottom of the neckline, and the neckline would be basically somewhere around this demand zone, right? So the lowest low for the demand zone is roughly around 90,873. So that's a minimum of like 18,000 below 90,000. So it's roughly somewhere around $72,000 the target for the Bitcoin. If this is definitely, if this is head and shoulders for sure, it will be confirmed when we break, and if this the target will be hit, obviously, right? If the momentum will be strong enough to hit this target. So if the bulls will not do something to invalidate this pattern, we might have a topping formation, head and shoulders pattern, which indicates trend reversal on Bitcoin. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.